Okay, so it's a couple minutes after the hour. So let me go ahead and get started. My name is Alberto Guerra. I am an account manager at BuildItSac. I want to welcome everyone today to our webinar and thank you for joining. You can submit questions anytime in the conference chat or during the Q&A section. Let me get started by introducing one of our market leaders, Michael Collins, who will be leading and moderating this panel today. Once Michael gets started, he will introduce the great group of folks who are part of this panel. A little bit about Michael. He is Managing Director and Partner of Building Industry Advisors, an investment bank that serves the mergers and acquisitions and capital needs of building product manufacturers and distributors. He leads the firm's efforts in the pro dealer segment and the window and door industry, an area in which he has conducted extensive research. This includes publishing an annual benchmarking survey, conducting semi-annual industry update webinars, and writing monthly articles and blogs for Door and Window Manufacturer magazine. Michael is a frequent speaker at numerous industry trade associations, and his specialties include mergers, acquisitions, business sales, and the placement of debt and equity capital with a particular focus on the building products industry. Thanks again for joining us today, Michael, and for moderating this important topic. Please go ahead.
Thanks, Alberto. Thanks, and I want to thank all my panelists for being here, and thank you to all the attendees for taking time out of your busy schedules to join us today. I'm actually here today for the first time in my new role at Equinova Capital Partners. It's a newly launched firm owned by Walt Keurig and myself. Walt is my business partner. And those of you who know me from Building Industry Advisors know that we sell building products companies and help make acquisitions. Equinova Capital Partners will function in all the same ways with regard to M&A, except that it's also kind of a classic merchant banking model where we'll be making acquisitions for our own account as well. Although in the LBM space, we will not be making acquisitions so that we're not a source of competition for some of the buyers that are on this call. So just to make that clear, and more will be coming in the weeks ahead about Equinova, but we're very happy to be launched. We have made one significant acquisition and 3 minority investments in the last couple of years. And it really represents a rebranding from Building Industry Advisors. So happy to be here and very happy to have our panelists with us today. And I don't know why in all of these sessions I've hosted, it didn't work out before that we had not only buyers here to share their view and their perspective with you, but also past sellers of companies as well, because for most of the attendees that are listening in on the call today, they are more likely to be a potential seller of a business than necessarily an acquirer. So we wanted to have some buyers and some sellers. We'll mix it up, ask a good group of questions, and really give you perspectives from both sides of the negotiating table. So very excited to have this topic for the first time. And I'm going to ask my panelists to introduce themselves and just give everybody the understanding of the connection between the companies on the call in terms of who is the acquirer and whose company was acquired by whom. So with that, I'll turn it over to Jim Hooper, who is the Senior Vice President of Mergers and Acquisitions at US LBM. Jim, thank you for being with us. And if you could please introduce yourself and your guest, that would be great.
Thanks, Michael, and thanks for having me today. My name is Jim Hooper. As Michael said, Senior Vice President of M&A for US LBM. I've been with the company 6.5 years. And since the company started in 2009, since LT Gibson, our CEO, started the company, US LBM has done 82 acquisitions over the last 12 plus years. And on the call today with me from our company is John Vaughn. He was acquisition number 68 of Brand Vaughn down in Atlanta. So John, I'll let you introduce yourself.
Number 68 in order, number 1 in your heart. I'm John Vaughn. I was the president owner of Brand Vaughn Lumber Company, which was a family-owned business that my grandfather started back in 1946. We were family-owned for 75 years until we were acquired July 1 of last year by US LBM. And subsequent to that, I took a role as the regional vice president of the Southeast for US LBM, so covering Georgia, Florida, Alabama, Tennessee, Mississippi. And appreciative to be on the call today. And I see LT's on here, so I promise not to embarrass you.
Thanks. And also with us, another serial acquirer in the industry, it's Jeff Smith from Kodiak Building Partners. Jeff is the Chief Financial Officer. Jeff, you can introduce Kodiak and your guests, please.
Sure. Thanks, Michael. Yeah, I think everybody's pretty familiar with Kodiak. Similar story to US LBM, timing and scale just a little bit off, but founded 11 years ago, 2011. So we celebrated a 10-year last year. I've done about 35 acquisitions over that 10-year period. Prior to that, I spent 8 years with ProBuild at the time. Now BFS. So kind of some similar connections in our pasts. I'm doubly blessed today, not only to have two of our selling business owners with us, but also not only the fact that, first, the fact that we have their businesses, but second, the fact that they're willing to stay and help us after the fact. And so I'll turn it over, first of all, to, I guess we'll go in tenure here in terms of the oldest acquisition, which was in 2018, Jerry Jean. Jerry?
Thanks, Jeff. My name is Jerry Jean. I owned Builders Millwork, located in West Central Wisconsin. The company was founded in 1975. I bought it in 2002, subsequently sold it in June of 2018 to Kodiak. And I believe we were number 16 as far as acquisitions. Builders Millwork is a value-added manufacturer of custom wood doors and millwork. Also have a hollow metal and hardware division, and sell direct to large general contractors throughout the Midwest, mainly multifamily, commercial, hospitality, our main end users of our products.
Thanks. And Jerry
Hey,
is a former client of mine, so good to
Full
see you.
disclosure.
Full disclosure.
Full disclosure.
Not at my request. It was a happy.
However, and I have now become senior vice president with Kodiak probably a year ago in charge of.
Yeah, so Jerry oversees kind of a whole door and millwork division around the country. In addition to keeping a finger on the pulse of his operation that back in Wisconsin.
Yeah, welcome.
So one of our more recent acquisitions, just kind of the conclusion of last year in December of 2021, Tony Shepley with Shepley Wood Products. But Tony, I'll let you give a little background.
Thank you, Jeff. So I got into this business as a 25-year-old. I literally started off the back of a truck on Cape Cod in Massachusetts. We didn't have a forklift in those days. I was the forklift, and we grew it into a 3-unit pro dealer. And as Jeff said, last December became part of Kodiak, and it's been a very interesting thing. So I've been doing this for about 45 years, and I'm still learning every day.
Yeah. Well, welcome, all of you. Appreciate it. Jeff, we'll stick with you, and I'll just start off with the first question. How did you happen to meet? And I guess I know the answer with Jerry, but how did you happen to meet Jerry and Tony? And I'll combine that with another question I wanted to ask, which is, how did their companies stand out in the crowd of deals that you see each year? You and Jim both probably see 100 deals a year, if not more, of offers of, hey, what about this great company? What about that great company? So how did you meet them, and how did their company stand out to make you not only be interested in it, but want to work hard enough to be the successful buyer and beat out other interested parties? How did that happen?
Yeah. So I'll take the first one first in terms of introductions. And both of these gentlemen, we kind of ended up, getting introduced to in similar, I guess, slightly different fashions. I'm sure they would tell the story a little different, but Jerry happened to be in Denver on a Jerry has kind of a investment banking background as well. And so, he was an investor and an owner of the business that he had in Wisconsin and Minnesota, but was looking at some properties in Colorado and some other things. And Jerry, I can't remember who the connection was that introduced us, but somebody said, hey, you really need to, these Kodiak guys are there, you should just talk to them. And Jerry sat down with our CEO and one of our M&A guys at the time, and just had a conversation. This was 2 years before our acquisition, so in 2016, and just talked about kind of how he approached this business, what he wanted to do with it long term, and we just agreed to keep in touch. And at some point, a couple of years later, Michael, is when he got introduced to you and kind of started a quick process. But at that point, we had an understanding of who we were, and knew that from a personality perspective, we might be able to work together. Kind of similar to Tony, although we couldn't get in to talk to, because Tony's reputation precedes itself in that market. And kind of always wanted to get in and talk to him. But at some point in that process, I think just from a generational planning perspective, Tony had been using an advisor that he trusted and had a good relationship with, and when the potential parties that they could go market to when it came time to come to market were laid in front of him, kind of similar, Michael, to you having done deals probably with us and with Jim before. This individual said, "Hey, look, here's a couple, but I've done a deal with Kodiak, and I kind of tell you this is the way this goes." So we're able to start that conversation, which really leads me to kind of the next thing. And we look at all kinds of stuff. Obviously, when we look at acquisition candidates, we're looking at markets and customers and financial metrics and facilities. But the first thing that's kind of required is that the leadership team, we want a strong leadership team. And we want that team to be a cultural fit with what the rest of Kodiak does. And so we're managing 30 plus different brand names around the country, and trying to create some synergies, not in necessarily making them the same, but in the collaboration among them. And we feel pretty strongly that if they can fit in our culture, we can all be successful. And if they don't fit in our culture, that's fine. There's kind of room for all sizes. But for both of these individuals, in terms of how they ran their business, how they approached their market, maybe even more importantly, how they approached their employees was very important. And so it kind of opened the door. Obviously, that there's significant diligence, and they could tell you the stories about requests for documents and records that most people that haven't sold before wouldn't be familiar with. But the process is the process, but we have to start to be comfortable with the culture.
Great, thank you. Jim, same question for you. How did you get introduced to John and his company, and what made them stand out for you that made you realize we want to take this one all the way to the completion?
I actually met John at I believe it was an LBM Journal conference in 2016, I believe, in Charlotte. And I joke with John all the time. The only thing that took longer than getting him to sell to us was me courting my wife. It was a long journey, about a 5-year process, and really what drew us to John outside and his company, outside of him personally, was just the culture that he and his dad and his grandfather built there at Brand Vaughn. Once we got acquainted, I started following John on his LinkedIn page and started following the company and some of the things that they were doing. It was an impressive culture, and it was just something that we felt would be a good fit for us. So over the years, we built a personal relationship with John and his dad, and I think that obviously was helpful in the process. And that's really important to us. We spent a lot of time during the due diligence process, even before we get into really discussions about a deal, just trying to understand the people personally and how they might fit into our culture. John and his team were a perfect fit.
Great. That makes sense. When we, to turn to a question for the sellers, when we work with clients that are selling, we've come to understand over the years what an absolutely emotional decision it can be to sell a business and to make that decision to put it into someone else's hands, your family's legacy and the work that you've done. I guess, again, to combine a couple of thoughts, one question that we get a lot from clients is, when should I tell my management team? And how soon should I tell my management team? And so if you could share, how soon in the process did you tell, maybe various levels of the company, from the senior management to the mid-level, and what was the hardest part about making that decision to sell the company? And Tony, we'll go ahead and have you, since you're not muted, we'll have you start off and answer that for us, if you would.
Sure. Michael, somebody described the process of selling your business as 80% emotional and 20% financial. And although there is a lot of finance that goes to it, the emotional part is a pretty big part of it. I brought in our general manager and our CFO 3 months before the closing, and it was pretty terrible for them because they had to be sworn to secrecy. And I said, look, you can't even tell your wives. And there's nothing worse than skulking around with a big secret that you can't talk to your company about. But at the same time, you've got to keep this confidential. We brought in the rest of our senior management literally a week before the closing. And then we brought in the entire company literally a couple of days before the closing. And if you'd taken a baseball bat and hit people over the head, the effect would have been less than the effect of standing everybody in a room for the first time in 2 years since the beginning of COVID and saying, we've sold the business. And all I said was, this will be the shortest talk you ever hear me give, because you have to sort of deliver the message and let people process. So it was a big deal, but there's a happy ending, which we'll get to later. So.
Okay, good. Yeah, appreciate you sharing that. Jerry, do you want to go next?
Sure. My story was a little bit, well, kind of the opposite of Tony's. I bought Builders Millwork with the intent to eventually sell it. It's not a legacy company for me. My family didn't own it. Still emotional though when you finally get to that decision to sell, because your employees. I mean, I owned it for 16 years, and your employees become your family. So it is still difficult to tell those folks. But we're a small company, and you wear a lot of hats. So I was essentially the initial management team, and I kept it as confidential as long as I could, and had a specific timeline and process for the transaction. And up until I was absolutely sure it was none of the final terms of the agreement were going to change, that night, my brother worked for me, and he had a small ownership in the company. So I felt obligated to tell him first. So I met with him that night. And then the next morning, I met with my management team or my senior leaders. And then 2 days later, I met with the entire company, and we immediately began with Kodiak, starting the onboarding process. And I think 2 or 3 weeks later, we actually closed the transaction.
Okay.
So
and
for
John,
us,
what was your experience with that?
Yeah. So we had early on, our CFO was involved. He was integral in helping us kind of think through options, because I mean, Tony put it well, 80% emotional, 20% financial. We needed somebody that could help us take some of the emotion part out of it. What was the best thing from a stewardship standpoint of how do we handle this for our team members, our associates? And he was a steady hand and a kind of a pragmatic approach to being able to have those conversations. So it was really good to have somebody in that super trusted. And again, that was a tough position for him to be in, because he's at the same time helping us run the company from a CFO standpoint, but also understanding, keeping an eye on how do we think about this? And once we got under LOI through the due diligence, about 2 weeks before closing, I brought a couple folks in from our senior leadership team, our VP level group. And the plan was a few days before closing to tell the rest of our management team, and then the day of closing. But, it just starts to be a buzz. And rather than them hear something from a vendor or a customer or something like that, it was pretty amazing. We had a meeting. I said, has anybody ever tried to keep a 250-person secret for 48 hours? We're going to do that here. And I was really incredibly appreciative and impressed with our team, and just humbled at their ability to keep that secret, so that when the closing came out, it was our friends and family that knew, and that was about it. And we were able to go forward with that. But I think it's based on trust, based on timing, based on situation. I think there's a perfect recipe for that. Yeah. But we were fortunate to have really trusted people in the process.
Yeah. Well, looking at when a company comes to market, there's always a backdrop of very unique aspects to that. When Jerry's company was sold, inflation, if someone said they were worried about inflation, you might have wondered what country are we talking about. This is not, now inflation is the buzzword of the day, and it's on everybody's minds. And certainly in the M&A world, it has a different kind of impact than it does when we're paying at the pump or at the grocery store. And the impact is on the financials of the company and the financial performance of the company. So I'd like to go back to Jim and ask, as you're looking at companies now, how are you accounting for the inflation effect? Because we're seeing virtually, every product, maybe some not as much as lumber, but virtually every product has undergone some kind of inflation in the last couple of years. how are you addressing that? How does that come into play in valuing and assessing companies?
Yeah, there's definitely no easy answer to that. I mean, it's been a challenging, 12, 18 months here with the volatile market, especially around the commodity products. With any investment in M&A, especially, the biggest thing that we try to do is look at predictability of cash flows. And so if you can predict your cash flows and your earnings for future periods, you can make decisions around future investments and how to grow the business. So that's really our focus during diligence. And I would say it's more of an art than a science. I'm sure everyone has a different view on where lumber is going to potentially be, or the commodities are going to potentially be over the next several years. And so there's definitely no perfect answer to it. But the way we try to approach it is try to really look at a lot of different data sets, not only what's happening from an inflationary environment around certain products, but also what is happening in the market from a growth perspective. Get that potentially help offset some of the deflationary risks that is inevitable around some of the commodity products as we're seeing right now. And so, again, a very complex question, no easy answer to it, but the bottom line is we try to take an approach where we say, okay, if lumber is going to be here, the commodities are going to be here, what is the predictability around those earnings at that number? And we try to normalize the earnings and try to assess value based on that approach.
And I would assume you're looking at a company's continued ability to maintain margins in a price increase environment.
Yeah, I mean, obviously, that's a key component to look at any of these businesses. Is if you rewind, 3 or 4 years ago when you didn't have the big fluctuations, the volatile environment, we were looking at all the same things we look at today, and growth, housing starts in certain markets. What is the margin growth opportunities? What have historically these companies done from being able to grow margin, control operating costs? All those things are still part of our playbook, but now we've just added this very complex dynamic of trying to normalize earnings for an inflationary period, then a deflationary period, then another inflationary period. So It's been incredibly difficult, as you can imagine.
Yeah, absolutely. Yeah. Jeff, how are you viewing that, the commodity inflation question? How does it impact your work?
Yeah, it's a similar conclusion. It's added a level of complexity and brought more elements into the analysis than I think they were always there. But I think as you looked at, okay, inflation risk, Michael, to your point earlier, with Jerry, we may have considered that, but as we got into his historical margin performance, his market position and opportunities going forward to look at cash flows into the future, that wasn't a big risk factor that we had to kind of put a number on with respect to working on valuation with Jerry. But over the last year, there's a couple elements to this that we've kind of become more familiar with. So to some degree, that we've got stuff. If you set aside the non-commodity product inflation, some of that's going to be a little more permanent, perhaps, than the volatility in the raw commodity products. And so we have to do a lot of more work on product mix and where that drives margins for a given business. And then as we look at the commodities, we look back and sit down with that management team and kind of work through what they've done over the last year and a half to manage that volatility. And then we can put, from a commodity perspective, kind of roughly 3 buckets of scenarios together. We kind of have okay, it's permanent inflation and it's not going back down, or we get the return to normal, which probably won't happen either anytime soon, or we have the new normal. And how do we manage our way through the new normal? What are the, how do our contracts work with our customers? How do we sell? What's our market position? And determine kind of the sustainability of margins or how those will be impacted under kind of various changes going forward and changes in the cost structure. So kind of said in a similar way, it's more analysis on stuff that we didn't spend very much time on in the past. And we take all those factors into account, but still do all the work on future population growth within an MSA and on other factors that we think are really important to kind of having long-term profitability in a given business.
Mm-hmm. Yeah, sometimes the party on the other side of the table makes light of a company's ability to maintain its margins in an inflationary environment. And I always think that must be a person that has never handed a price increase to a builder, because just simply maintaining your margins and not getting bled white for a little while before you're able to pass on a price increase is no mean feat. So, well, let's turn back to our sellers with the next question. I'm curious to know, with now, 3 different amounts of perspective in terms of a different amount of time that's passed since your company was sold. As you look back on it, though, what is the most surprising thing that you learned or that occurred or that sort of settled in and you had realization that you had? Hopefully there are some positive ones, but we'll take both or either positive or negative surprises about the process of selling your company. What surprised you about it? John, we'll start with you.
So the most surprising thing from the process was just some of the complexity that we were looking at, from understanding the documents that had to be required, some of the vetting and the negotiating side of it. I'm somebody who doesn't like to be the least educated person in the room. And so I did my homework by going and doing a continuing education class at a local university, got an M&A certificate, which Jim doesn't quite have yet. He was working on that, but because I just wanted to be able to have intelligent conversations when some of these things started coming up, and having, whether it's on some of the valuation side and what are we really talking about? Is it EBITDA? Is it a proxy for net present value on cash flows and things like that? I wanted to educate myself on that. So just kind of getting into that and understanding, so that even when I have advisors and things like that I'm not having to fully rely on them. And just the level of complexity that goes into that was a surprise. And then, just also understanding that, when you're in a private business, when you're in a family business for a long period of time, you can kind of get in your own echo chamber around things you're doing well, things that you think you're doing poorly. I mean, is the impact that you're having truly what it is? And so as you go through that process, both as you're getting an outside perspective on the value of your business, which, Jim and I joked at the first one, it didn't matter what number he said, he was going to be too low on the beginning of it, because there's just that emotional piece of it. And how do you, again, it goes back to the kind of the, when do you bring people in, was how do you decouple some of, like, if you make that decision that we are going to go somewhere else, how do you decouple the emotion side and really think about it from both the financial and the stewardship side? And I was just appreciative of how Jim and LT came alongside and said, hey, look, we're stewards as well. This isn't just about dollars and cents. Obviously, that's a part of it, but how are we going to be a steward of these brands? And so the surprising piece to me, I mean, kind of just recapping, is the complexity of the numbers and how much it took to educate yourself. And as much as I thought I knew, it wasn't even close to what goes into it. And then, just making sure that you're thinking about it from a pragmatic standpoint, and how do you decouple from those things?
John, at what point did you share with Jim and LT that you had earned an M&A certificate? And on the scale of 1 to 5, how nervous did that make them? So
probably a 12. I threw that in their face early. I was like, I'm educated now. Y'all better put your sharpening that pencil.
Yeah, that's the first time I've heard that. I've talked to a lot of sellers. That's a new one. Jerry, let's go to you next. What was the biggest surprise in the process for you?
Frankly, there really wasn't a big surprise for me. Nothing that was a game changer anyway. My background was in the banking industry, so I kind of knew the process. I was involved in the acquisition side, being an acquirer on a smaller scale, so I kind of knew the process. So there wasn't really any big surprises there. Of course, I hired one of the best investment bankers in the industry who prepped me for that as well. So that helped too.
I was going to make that joke, but I don't want to go to that.
It's no joke. It's okay.
I appreciate that.
I'll expect a commission check after this. But
there you
go. So the process side wasn't a big surprise. From probably one of the big surprises, I guess, was the lack of surprise that it really was kind of a non-event. And what I mean by that is, the employees, once they got past that initial shock, but I explained who Kodiak was, and certainly they they trusted me, and I assured them that I wouldn't sell just to anybody, and that they shared the same values and culture and value prop as I did. So once they got past that, and then really the customers, to them, I mean, frankly, I don't think they really cared. I mean, nothing really changed from their perspective.
Mm-hmm.
So I mean, hate to, not this, I don't want to, I'm not trying to be boastful about it, but there really wasn't any major surprises.
That's good.
At least in my transaction.
Yeah, that's good. And I think customers have gotten used to the fact that we're in a very active M&A environment, and across the board, they typically are accepting of it. They understand people want to do different things in their career. So, yeah. Tony, how about you? Big surprises? Like, as I said, you've had less time for the surprises to occur to you.
Well, I didn't get an M&A certificate like John, but I think I might have gotten an
Surprises,
MBA
for
along
now,
the way.
what's been the biggest surprise so far? Yeah.
Really the amount of work that goes into the due diligence is a little bit of an awakening, but it makes perfect sense once you're into it and once you go through it. So that was a great education. Seeing your business through the lens of somebody else's view was fascinating, and seeing it through several sets of lawyers' eyes, that was interesting too. And then I think the biggest surprise of all, which was a very pleasant one, I couldn't believe how supportive customers and employees and vendors were. It was remarkable. Remember, I've been here since day one, so it's very different as a founder leaving, because people feel abandoned or given up or whatever. None of that. It was remarkable. So I'm 6 months in now. The worst is by far over. And the amusing question that I get asked at least twice a day is, "What are you doing here?" I say, "I'm working." And they say, "Oh, I thought you'd be out of here. I thought you'd be retired." And I say, "You know me well enough. Do I look like a guy who's going to go off and retire?" So
Yeah.
it's been a very it's been a better outcome than I could possibly have forecast myself.
Oh, that's great. That's great. Congratulations. Jeff and Jim, let's do a quick one. Just quickly, last year we all spent a ton of time scrambling to beat that December 31st closing date because of concerns about capital gains tax changes that were supposed to happen this year. It hasn't happened yet. We've obviously got half a year left. Doesn't look like it's necessarily in the works. Are you seeing any rush to the door this year? Jeff, we'll start with you. Of people planning around another potential cap gains increase, but the one that we were expecting last year hitting us on the head.
Yeah, I haven't heard anything. I think the fervor around that was really kind of started in 2020, and maybe just kind of the shock or planning for kind of a complete change in administration, not only in the White House, but kind of all across the board, and what could come with that. But I think others. So some scurried in 2020, a few others in 21. It hasn't really been on the topic of conversation for the folks we've been talking to this year. Haven't heard much.
Mm-hmm. Mm-hmm. Jim, how about you?
Yeah, I mean, I would say I've stopped trying to predict what our friends in Washington are going to do these days. And so, I think while over the last couple of years, this has been obviously a headline topic, people trying to potentially get ahead of it. When I talk with potential sellers and this topic comes up, I talk a lot about you should be selling your business for a lot of other reasons other than just the tax impact. There's a lot better reasons, in my opinion, whether it be succession planning for your people, succession planning for your family, or making decisions about what's right for the future of the business. Are you able to make investments in the business that are necessary, or is it better that you sell to someone that can make those investments? I think those are much better things to be thinking about than just the tax implications, because there's no predictability around those items. And so, my guidance to the people that we talk to is, yes, it's an impact, and yes, it could potentially impact your proceeds, but there's no guarantee on that. So really make decisions around selling your business for other reasons that are, in my opinion, more important.
I could see that. Jim, to continue with you, how are you seeing deal flow this year versus last year? How would you say is the tempo of activity of new deals that you're seeing, regardless of how many you choose to pursue, but just deals out there being done?
Yeah, I mean, surprisingly, I thought going into this year that there would be, a little bit of a slowdown from the deal flow. We have seen Deal flow remains strong. Our pipeline remains strong. And I think there's a couple of reasons why. I mean, obviously, earnings continue to be strong given the inflationary environment that occurred through the first quarter and through April, before we've seen kind of the turn here in the commodity environment, which will inevitably affect earnings going forward to a certain extent. But I think the market obviously is pretty dynamic right now with just some of the puts and takes in the market. I mean, you see public company comparables out there trading at record discounts to where they historically have. So it's a challenging environment for both buyers and sellers right now. But at the same time, I think if both parties go in being realistic about where the market is, I think there's deals to be had. And you guys have seen us do a couple recently that we feel are in good markets that are going to be good additions to us. And we're going to continue to pick our spots on transactions going forward in a similar fashion. But I think that our pipeline remains strong. And I think as long as the overall macro dynamics of our industry remain strong, I think people will continue to test the market out there.
Yeah, let's hope so. Jeff, how are you seeing it? How's deal flow now versus last year?
Yeah, I think I'd say it's similar thoughts to Jim's. We saw strong deal flow last year. We're seeing it's exactly the same number or level, but it seems pretty comparable. There's plenty to look at and plenty to have opportunities around. And the market still is, the underlying market is still strong. Financial markets are, causing everybody to kind of stand back and wonder what happens next. But it hasn't, directly impacted the kind of the new home builder for sure. And there's other elements of the sectors of this industry that are doing quite well. But when you boil it all down, we still, as we talk to particularly kind of some of the longstanding family-owned businesses, there's still going to be a need for some type of succession planning, for years to come. There's still a number of companies that they're kind of into that mature stage, and whether it's multi-generational and just too many to manage at this point, or no real successor, or just an estate planning need. I think that the favorable economic times over the last few years have caused people that may have done that eventually come back and start to think about it. But now, most have put some thought to it. Now's the time, or now's not the time. But as we talk to folks out there, there's still, quite a few that whether it's going to be this year or 2 or 3, 4 years from now, there's others that are in the queue. So still opportunities, again, assuming that economic situations continue to go forward.
Mm-hmm. Great. Well, one of the questions and one of the, I guess, points of resistance that we hear about a lot from potential sellers is the idea, well, how long would I have to stay after the company is sold? And, I can remember accidentally telling the person one time, well, you'd have to work full-time for a year or two. And they said, I don't work full-time now. It's okay. You will not have to increase your work. Whatever you're working now, you'll have to do that for a period of time. The point is, I think a lot of sellers don't approach the market because they're worried about that dynamic of having a boss. They'll say things like, I've never had a boss since I was in my 20s. I don't do well with a boss. I don't like having a boss. So you three have continued with your companies, Jerry for the longest, so we'll start with him. But how would you characterize it to that entrepreneur who's been on their own for a long time? What's the upside? What's the downside of quote, having a boss? Although I suspect none of you think of it that way. Staying in an organization where there is an ownership structure and an executive structure that you report to, but you're still doing some of the same things, but new things. How would you characterize that? And sort of as advice to your potential selling owners?
Yeah. Well, from my perspective only, when we started negotiating with Kodiak, and I'm fairly young, I guess I'm getting older, but I still had some runway left in me, and they presented me with the opportunity to stay on with the company, and I continued to do that. And I ran Builders Millwork for a couple of years, and then the opportunity was presented to move on into the corporate, Kodiak corporate. So I certainly Kodiak's model of decentralized business model, I mean, really, it's they keep it at the local level. So although I didn't own the company anymore, it was still my company. I mean, I ran it like it was my company, and they gave you that latitude to do that because that's why they bought you. I mean, they want you to continue to do what you do well. So why would they want to change that? So it really was a great opportunity for me to continue on with not just my previous company, my old company, but then to continue on with Kodiak. I guess it depends for future sellers. I mean, for our potential sellers, I guess it depends on where you're at in your life cycle and, you know, from a retirement standpoint, but, you know, there's some, you know, I can't speak for them, but, you know, throughout that process and what Jeff just said too, you know, one of the difficulties is there a succession plan in place? So that's all part of that review process. But from my perspective, it's a great opportunity, continues to be so for me to stay on with the company.
Okay. Well, John, I know Brand Vaughn covers a large area, but when you listed the states you're responsible for, it certainly sounded like you picked up some additional territory and responsibility. How was your experience on that front, Ben, with the trade-off of being part of a bigger organization?
Sure. Yeah, it's been good. It's, you know, when I was talking to Jim and LT early on, I said, look, I'm unemployable. I haven't had a boss in a long time. And so I'm going to be a problem. And it kind of goes back to the fact that, you know, I said it earlier, you kind of get in an echo chamber and you don't really question how you make decisions, kind of your process for decision making and things like that. And while sometimes it can be different because I haven't had a boss in a very long time, getting in the scenario where you're being questioned in a positive way of saying, hey, well, I know you've always thought about it this way, but, you know, I got examples in North Carolina and in Texas and in Oklahoma and in, you know, Michigan, Mississippi, whatever, that kind of challenge your thinking in this way. And all of a sudden you test it and it's like, man, you know, you get in that echo chamber and all of a sudden you think that you're doing everything right and you're making good decisions. Having exposure to those things while stretching what we've done for forever in a lot of ways, it's been really good. I've learned a lot. Seeing the resources that, you know, I didn't know what FP&A stood for 12 months ago, and now FP&A is my best friend because you're able to think about things and analyze things in a way that me and an Excel spreadsheet would do prior. Now I have resources and team members that I can learn from, that I can resource to do those sorts of things. And yeah, my geography was pretty big at the time. I mean, in my world, you know, 6 locations around the state of Georgia, that felt big, felt like a lot, but taking that size and going 6X from a revenue standpoint and from a geography standpoint, being on a plane, there's challenges with that. Being away from my family more is different. But I'm also know that I'm learning, I'm stretching, you know, you can kind of get in a little bit of a rut when you're kind of in your own lane for forever, and being able to take out of that rut is exciting. I'm learning more than I probably would have learned ever before. No matter how many M&A certificate courses I would have taken through the business cycle process to understand, okay, how do you think about finance different, HR different, IT different? All these strategy things, as well as having some of the healthy side of what we do, seeing other business cultures, how do you build healthy cultures, trust oriented, things like that. So it is challenging because I haven't been questioned in this way ever, well, in a very long time. But that's not a negative thing because it's allowed me to grow as an individual, as a leader, being able to have influence on greater areas and have opportunity to grow.
Yeah. Well, LT shared in the chat that educated sellers are their best friends. So you're clear on the certificate. It's okay that you got the M&A certificate. Before we go to Tony, I do want to share if there are any questions anyone wants to ask, feel free to share them in the chat. And if there are questions, we'll cover those here shortly as we come to the close of the hour. Tony, how has your experience been with that? You're very recent in it, so be fresh on your mind.
You know what's interesting, Michael, as you enter this, it's a journey. It's quite a process, and there are things that you don't completely have the ability to predict. I would say, you know, yes, an informed seller has got a good head start, and you definitely want to pick the right advisors. I have chosen to stay on with the company, which is probably less than a lot of what people do. I still get a kick out of this business. And for no extra cost, I've had a lot of the boring admin, insurance benefits, workers' comp, all that stuff that has been lifted. And what I've been allowed to do is to run the business just the way I ran it before, which is fascinating because it takes a lot of courage on an acquirer's part to say, just do what you do. You go sell, you go make people happy, and we'll take care of the back end stuff. So in a way, it's been an interesting chapter.
Yeah. Well, you've listed some of the things that the owners are the most happy to get rid of. That's always a trade-off. If there's anything negative, those things weigh very positively on the positive side.
And how many owners really do that part of the business very well? I'll tell you, it is such a different deal going out and buying insurance now when we're buying for many thousands of lives as compared to buying for a couple of hundred.
Yeah,
So,
I'm sure. Yeah. Well, I'm going to direct this question to the sellers since you're theoretically closer to out in the trenches and would have visibility on this aspect of it. Obviously, we've all had supply chain challenges. It's almost gotten to the point where, the things we used to get grumpy about when they weren't at the grocery store or available in business, you just sort of take for granted now that there are things that aren't going to be there when you expect them to be, and lead times on everything in our lives are crazy. We've almost gotten numb to it. From your perspective out in the trenches, are the supply chain challenges easing, or are we due for a little more trouble before it starts to get better? Has it started to get better, or is there more to come before it gets better? And Tony, we'll start you with that question.
Michael, it comes and goes. I think part of it is that we've improved a little bit, all of us, in how we respond. Actually, I sort of like conditions a little bit challenging because it thins out the wheat from the chaff. We've got to figure out how to supply ourselves better. We've got to figure out how to stay ahead of some of these challenges. And who knows what little challenge will pop up next in the way of an outbreak or plants closing or whatever. So these are times that make us good.
Yeah, Jerry, how about?
It's not getting easier.
Thank you for putting it right to the point at the end. Jerry, how are you seeing it?
Sure. I can only speak from my perspective in the companies that I work directly with the Kodiak companies. Now, when I was acquired, there wasn't a supply chain issue. And I've since moved on and kind of got past being in the trenches, running a company. But from my perspective in the companies that I work with, there's still challenges. When one area straightens out, there seems to be another area that doesn't. Getting product doesn't seem to be as big an issue. You can get it now, but it's how long is it going to take you to get it? And but throughout this process, I mean, if there is a bright side, it's everybody is dealing with it, not just certain companies. So the end user and the customers have gotten educated about it too, and are expecting longer lead times and the like. But certainly, pricing increases seems to never end. So there are still a lot of challenges. And supply chain also, in my opinion, is labor. And labor is very difficult to find right now. And then you're dealing with wage inflation. So certainly many challenges still. I would have to say it's gotten a little bit better, just to put a positive spin on it, but there's certainly many challenges still I have.
Mm-hmm. And John, how about you? How are you seeing things out there?
Yeah, very similar. I mean, as soon as something starts getting better, lumber, OSB, something like that, then, drywall becomes harder to get, or drywall mud becomes harder to get, or light gauge metal, so as we kind of look at it, it feels like a game of whack-a-mole as we go. And just seeing some of the consistent price increases on things, and then seeing kind of what, the volatility of the lumber market. And so I think part of it is we've had to hone our skills on how do we sequence things better? How do we build in transparency of process with our builders, knowing what their projected starts will be so that we can, and then share those information with our vendor. I mean, so it's trying to figure out how to their point too, is how do we sharpen our axe while we go through this process. And be better on the other side of it, because something else is going to hit, whether it's inflation going up now, and how do we manage through, pricing continuing to inflate while the economy continues, starts to slow. How do we manage through things like that? It just, it's hopefully will drive us to better critical thinking, better decision making, then how do we come back on the other side of this in a way that's meaningful to be able to make our businesses stronger. And so managing the business through that. So yes, there are pockets where it's getting better. No, there's pockets that it's getting worse. And so just kind of determining how are we going to react to that and how do we see this in the future a little bit better is kind of our goal as we go through that process.
And this is kind of I have a question from an attendee, Craig Webb from Web Analytics. You know, this is a little bit related to what we just covered. So hopefully I'm leaving you enough of a difference to answer here, but you know, Craig points out that we're entering a period of stagflation where there's a little bit of an economic slowdown and inflation. And it's been so long since we've had stagflation in this country that I remember being even knew what that meant when I was in college, because we just hadn't experienced that in my lifetime. Now that we're headed for this period of stagflation, what things should you do differently to manage a construction supply business under conditions like that? And I was going to throw that to either Jim or Jeff if you want to take that one, or I can ask the guys down in the trenches. Jeff, you want to cover that one? Yeah.
I'll give you some thoughts. There is no easy answers. Probably what everybody would tell you. You know, and the challenges today are a little bit broader than just inflation and potential slowdown in demand. So you've got the potential labor constraints. So you have enough people to get done what you need to do. There's other elements of timing and supply chain today. And what we found, like it typically, I think historically anyway, from what I remember, without the pandemic and everything it's created, we used to, you know, you see these things coming and you would start to tighten up inventory. You'd start to spend even more laser focus on cash flow, on customer pricing, and trying to look at ways to maintain gross margins in those periods when you're possibly under a lot of pricing pressure from your customers. Nowadays, that management of inventory is more difficult because while, you know, we may have processes in place that make us really efficient in how, you know, we can buy just in time and all this other stuff. Well, we can't buy just in time anymore. We have to place a whole month's worth of orders if we expect to have anything to be able to deliver to our customers. And so it's become a greater challenge. The supply chain stuff has made it more challenging in managing, you know, those types of concerns coming back down the other side. But you know, I told everybody, I remember getting on, and it might have been with Craig who asked the question, a session at the very beginning of the pandemic, and they're like, well, what would you do? And it's like, well, I kind of remember the downturn a little bit from 2007. I think we all have some scars from that. And I just tell everybody, you don't wait till it happens to start planning for it. You start planning today. Okay, how do we go about these things over the next couple of years? If we see this scenario, how would we react, and how would we manage through that, either to survive or for the benefit of our employees or to maintain a certain level of return or profitability. But you know, it's not an easy answer. And Jim, if you have one, we'll take it.
Actually, Jim, do you mind if I jump in? I have another question from the audience. Do you mind? That way we cover a different topic. Appreciate that. The question is, do we anticipate a broad shift to vertical integration? For example, expanding beyond lumberyard purchasing to more manufacturing, tech, et cetera. How are you seeing that, the, you know, offsite manufacturing and on-site installation, that whole aspect of it?
Yeah, I can take that one a little bit around, you know, our acquisition strategy. And obviously you've seen over the last decade plus just the labor shortages that occurred in our industry, and you've seen, you know, the need for efficiencies in the build process. So, you know, that has obviously spurred you know, demand on the manufactured component side and some more offsite manufacturing. And you've seen, you know, us and others, you know, in the industry really focus on that over the last several years. We've seen our builders really gravitate towards those product lines and that level of service. So, you know, I would say that's a big component. That's a big shift that's happening right now. And in our opinion, that's going to continue in the future, just because of the need to continue to bring efficiencies to the overall build cycle.
Great, thank you very much. Well, so I don't see another attendee question. So just I'll throw out, as I warned, I might the lightning round question. If Jerry, John, and Tony want to unmute and get ready, very briefly, market outlook. How do you see the market the next year or so? Is it going to stay strong? Are we looking at threats? What do you see out there, Jerry?
Well, I guess I would say we're guarded with all the uncertainties, inflation and the like. Control what you can control and make sure you take care of your best you can to take care of your customers and your employees.
Okay, Tony, how are you seeing it? What's your outlook?
Never been even close to as busy as we've been in the last, it's so far this year. It's phenomenal. However, what we're trying to do is take the long view. I mean, there's going to be some cyclical nature to all this. You know what the biggest thing is? The labor thing. We all talk about it. You got to train to retain. We've got to make investments. We've got to stop waiting for people to show up at the doorstep saying, "Hey, I want a job." So we got to make our own employees. So we're trying to surf through this and really prepare for sort of the longer run.
Excellent. John, how are you seeing it? Market outlook next couple of years?
Not one size fits all. Not every market's going to be the same. You're going to have pockets where it's really good. You're going to have pockets where we're going to see some reduction in starts. And so I think it's making sure that we're investing in those areas that are growing, where there's influx of migration, in-migration to those MSAs, those markets. There's going to be, I don't think we can continue the toward pace we've had over the last 2 years, but if we're smart about how we do it and we have the long view, like Tony said, not having to necessarily report to Wall Street every quarter and being able to kind of have an opportunity to invest for the long term, that we'll win through good strategies that way.
Yeah, no, absolutely. Well, listen, let me just take one last chance to thank you all for attending and for all of our attendees for joining us today. We really appreciate you making time for us, and we're happy to share this with you. I'll turn it back over to Alberto to close us out. Thank you, everybody.
Yeah, thank you, Michael. And thank you again to all the attendees, panelists, and our moderator, Michael Collins, for joining us today. We will make this webinar available to you in the coming days. For anyone interested in learning more about BuildExact and how we're connecting builders to their dealers, leading to amazing efficiencies and an increase in sales for all parties involved, feel free to reach out to me or visit our website at buildexact.com. Thanks again for joining us and have a great day.
Thank you. Thanks, everybody.
All right, thank you.
Thank you.